Hello everyone, Elliot Gu here, joining you today from Sarasota, Florida again. Actually, I'm just getting ready to pack up and drive back across the Florida Peninsula home from the Sarasota Money Masters Symposium, which has been a great experience. I participated in an oil and energy focused panel last night. I had dinner as well with some other analysts here at the show. And I really got a chance to meet a number of you, both yesterday around my panel presentation, as well as just kind of walking around the exhibit hall. But unfortunately now I'm just enjoying my last double espresso here at the Ritz-Carlton before driving back across the peninsula. But I wanted to talk about a little bit about oil today in this video, and specifically about three major developments or indicators or issues that I'm seeing right now in the oil market. First up is the Commitment of Traders report. Now, many of you who've followed my work over the years know that I follow this data very closely. It's released by the Commodity Futures Trading Commission, the CFTC, on a weekly basis on Fridays. And it is basically a description of futures market positions held by commercial traders who are hedgers, as well as speculators in all futures markets, but particularly I like to look at oil and other energy-related commodities like natural gas. And during the government shutdown period, the federal government shutdown, the CFTC temporarily stopped releasing these weekly Commitment of Traders reports, which was a little annoying, frankly. But they just restarted releasing these reports on a delayed basis. And they actually won't be fully caught up with those reports until early next year. I think the 23rd or so of January, they say they'll be fully caught up. But we now do have data through late October of this year. Previously, we only had data through the last week of September. And what we're seeing is extraordinary. In particular, I'm looking at the speculators' net commitments, that's total longs minus total shorts, to the WTI, West Texas Intermediate Futures contract. And the way I like to look at this data, and I'll try to throw up a chart on your screen when in the editing process, but I like to look at the Z-score of futures market positioning. Specifically, how does the current speculative position in the WTI futures market compare to the 104-week or 2-year moving average? And what we're seeing is that speculators are more than 2.6 standard deviations short or net. Their net commitment is 2.6 standard deviations below that 104-week average. This is the most bearish we've seen speculators on this basis going back well over 10 years. So speculators are very bearish oil. Now, traditionally, this is a great contrarian indicator. When speculators are very bearish oil, it leaves the market open to positive surprises that would cause oil to go up. So when speculators are that short oil or that underpositioned oil, underweight oil, what it generally means is that they've already priced in a lot of the bad news out there about oil. And there's plenty of that's been in the media lately. You know, OPEC increasing production, talk of weak demand over the summer, which totally did not come true, but anyway, there was talk about it. And yet they haven't really started covering this very bearish position in oil. So I think that's very positive as we head into 2026, because I think there's a lot of things that could go right. And that brings me to my second point about oil, and that is OPEC's recent meeting, the Organization of Petroleum Exporting Countries. And I think that the big news out of that was that apparently Saudi Arabia pushed for this, an annual audit of individual OPEC and OPEC plus producers' production capacity. So when OPEC sets production targets, they set based on a country's, an individual country's production capacity. In other words, if they produce flat out, how much oil could they produce a day? But these production capacity estimates that OPEC has been basing their policy on are in many cases pure fantasy. In most cases, they're way higher than that company can actually produce. For example, countries like Nigeria just have not come close to producing at that level in over a decade. So their actual spare capacity, in other words, the difference between what they're actually producing and what they theoretically could produce, is pure fiction because that production capacity estimate isn't realistic. It may have been realistic 15 years ago, but it's not today. There are a few countries that have production capacity that's probably higher than OPEC's estimate. Classic examples are the UAE, United Arab Emirates, as well as Kazakhstan. But what OPEC is going to be doing is they've actually hired a US firm, US-based firm. And trust me, that's not by mistake. They're doing that to increase the market's confidence in these estimates, to evaluate their production capacity for most of the OPEC members. A few, Russia, Venezuela, Iran, obviously are not using the US firm to do this, but all the others are. And so I think there's going to be a higher degree of confidence in these production numbers going forward. Now, this audit is happening next year in 2026, and it will start pertaining to 2027 production estimates, capacity estimates, and production, the amount of production that each country is able to, their quota for production under the various OPEC supply agreements. So it's not an immediate thing, but I think through the course of next year, we're going to be hearing more and more about how a lot of these countries, their quote-unquote spare capacity is just pure fiction. And it's going to start to make its way into the mainstream media, even though in the industry we've kind of known about this for a long time. Interestingly, this is also going to be an annual exercise. So in other words, in 2027, they're going to do another one of these audits that will apply to 2028 production. And in 2028, they'll do another audit that'll apply to 2029 production quotas. So this is going to be an ongoing process, and I think it's really a great leap forward in transparency, but I think it's going to highlight and underline the fact that global spare capacity, the amount of oil that OPEC could produce but is not producing, which is the world's total supply cushion when it comes to oil, is actually far lower than many people think, many analysts have thought, and that these publicly disclosed numbers, again, based on historical production that's no longer relevant, would suggest. The final thing that I've been noticing is that actually a lot of the oil levered stocks in our coverage universe that we either recommend in the portfolio or are talking about maybe adding to the portfolio, certainly they're on our watch list, they're actually performing very well, even though oil prices have been kind of stuck, WTI in the high 50s, low 60s, and Brent, in the low 60s to mid 60s. And so historically, when we see energy stocks outperform the commodity itself, that's usually quite bullish. It usually means that a lot of the bad news is, again, already priced into not only the commodity, but the stocks themselves. And that any upside in oil probably is not priced into these stocks. So they're starting to move on the view that perhaps, they're starting to move higher on the view perhaps that things aren't so bearish in the oil market, and oil doesn't have a lot of downside from existing levels. So I actually think that presents an immense opportunity in the oil side of the equation. As we head into the end of this year and into early 2026, we're eyeing a number of names for potential addition to the portfolio. Also, we already have quite a lot of exposure to oil levered names that have started to really perform well. So if you'd like to find more about this, we are actually offering a 60-day totally free trial to the service via the link below this video. So you click that link and sign up to start your free trial today, but you won't actually be billed until 60 days from now, 2 full months. So that means that if you don't like the service for any reason, you don't find it useful, you don't like our calls and picks, simply cancel your service in the first 60 days and you will never be billed or charged for the service. So thanks, I hope you found that useful. If you met me here at the show, it was really great to meet you and talk to many of you, and I'll talk to you soon. Thanks for listening.